StockMinter.com here in the beautiful Black Hills of South Dakota. I'm your stock minter, Brian Johnson. And we are entering a brand new week of trading yet again. And you can see that over the past 2 weeks, we've really gone nowhere. We have had our ups and downs, literally, and they've been pretty decent moves, giving us opportunities to day trade this market. From a swing trader's position, you're really nowhere, though, over the past couple weeks. So, gut would tell me that we are going to see a break this week of this trading range, and we're going to find out who's going to take control, at least in the short term, whether it's the bulls or the bears. And here are the areas and levels we will be watching. So over the past week, you can see really nowhere over the past week, but these good moves have led to great intraday trading if you're able to day trade. From a swing trader's, yeah, you're probably sitting on the sidelines, kind of waiting to see which way it goes, and there's nothing wrong with that. That's for sure. Never want to be in a hurry to lose money. So we are going to watch some of these overhead levels here. And what I really like is ultimately this 12,300 level, and below us the 12,000 level. So if you want to mark a couple on your charts, these would be the more major levels I would be watching. The markets have been very good at some fake outs, so of course if you get entries below or above these areas, you might want to make them small. You might want to slowly work yourself into a full position, or you may just want to keep it kind of a tight stop on it until you know that it's going to stick above or below these particular levels. That would be exactly how I'd recommend you play these markets going forward until we get more definite confirmation on the moves. But it all starts, for me, above here and below here on the Dow. So you can see where we've been kind of moving sideways. Things are still in more of an upwardly fashion overall. And we're just going to watch to see if we don't break this line right here. And then, of course, this lower line here. Going to a daily, you can kind of see it a little bit more clear as well. So, yeah, we've been dancing between that 20. We're going to take that out of the equation. This is doing kind of what I had thought it might back about a week and a half ago or so, where it was going to chop through this 20, and that's exactly what we're seeing. So we want to watch breaks above here, breaks below here. It's really just that clear. For the more conservative, and I'm not so sure that it won't get there by then, but I really want you to watch the 50-day moving averages. Okay? So this will also come into play, I think, as we head our way downwards. Lower support then here and here, so about every 200 points after that. So definitely room to move for the bears if and when they want to decide to get moving. For the Dow, those moves then come up and above that 2375-ish, 2380-ish mark. You're going to have some resistance at 2390 and 2400. There's just a lot of good resistance above us. But for those of you that like the Qs, want to play this thing to the long side, above 2380 into 2390, and above that, I really do think we get back up into the 2400 mark. You can see below us, I really don't have any interest in the NASDAQ then short until we get way back below these levels, showing us once again that choppy action. Hammered its way. Now this one's moving a little bit more violently from the standpoint of all the way down to the 50 and then back up and through the 20 to the 50 through the 20. So you can see a big fight going on right here between the bears and the bulls. Really stuck between overall just a trading range of about 60 points within the NASDAQ. It's been down to it, back up, down, back up. Same type of styles as what we're seeing in all the other indices right now. You can see my overhead levels here to be watching as we come into the new week. Once again, what are we watching? 50-day moving averages below us. I'd be very cautious of those if we see any kind of bearishness enter the markets. Here have been our weeklies, and you can see pull it down, not today, pull it down. Once again, bulls come back in. So what are we starting to see? A lot of that same old lather, rinse, repeat of buy the dips, buy the dips, buy the dips, buy the dips. The markets just do not want this thing to fall at this point. And until that heavy selling really starts to take over, we can break some of these more major levels down here. There's really no reason to think that we can't sneak our way even a little bit higher than where we're at right now. This tends to me, it looks like it, we definitely, looks to me like we're in some sort of a wave 3 to the upside of some sort. And these wave 3s will absolutely bleed one side or the other. In this case, since we're going up, they'll just bleed the bears to death. And you can see it happening. I mean, it's been frustrating if you've tried to short this market. We've had good entries, we've had opportunities, but the bulls just refuse to let it go down, and the bears just don't come in mass. There's They're fine with it. They're fine with it. So let's see if there are some other economic factors that come into play this next week that might change that sentiment. But to be honest, I'm very, very flat to neutral coming into this week's trading again, as I was last week, because we just haven't seen the charts give us an answer yet, one way or the other. I can speculate on Libya, I can speculate on oil and gold, and all it is me guessing. And that is not how we play the markets. Well, let's let the charts decide which way to go. I'll be patient, and I know they'll give me the answer. But until then, I know it gets a little rough sometimes. Hang in there, guys. Patience, patience. It's like fishing. Patience. All right, SPX on a 60 doing the same type of a movement here. You can see the overhead levels and the lower levels, just as we've seen on all the other charts. From a daily perspective, dancing around that 20. Not quite as violent as the NASDAQ, where we haven't even tagged the 50 yet, but the 20 has taken quite a beating the last about week and a half or so. So you can see that's really kind of not kind of a non-factor for me at this time. I'm just going to continue to watch these overhead levels, and really right now, like I said, nothing truly broken from the bull side yet. We've got to get back below these lower levels. I still like it in and below these 50s down here. You can jump in a little bit earlier if you want to, but man, I'd be cautious. It's more of a gamble at that point once you start making those kind of moves. The VIX on a daily is still at or around 19, so this is not giving us confirmation and or indication of any sort one way or the other. From a weekly, I like that we've closed above this blue line twice. We haven't seen that. We haven't seen that all the way back since the middle of 2010, guys. It's been almost a year since we've entered this channel, and we have not seen two consecutive closes outside of it, and now we do. Once again, maybe this gives us some sort of a sniff at what could be coming down the pipe. I love the fact that it's above 19 and it's holding. So I like to see that. We'll see if the VIX doesn't give us some sort of a movement as well coming into the new week. Like I said, any bearishness into the market, I really think there's a chance here that the VIX could see a pretty decent spike to it before it's all over with. Apple 60-minute creeping its way up and above this little 360 mark, right at the 360 mark currently. You can see my new lines for the new week. Anything above 361, maybe if you want to dive in a little bit, you could probably pull a buck or two out of Apple to the long side. Then, of course, all eyes, I think, would be on about the 364 to 365 range to the upside. To the downside, tons of support below it. Be very cautious with your trades on Apple short. Has given us opportunities here for a couple of days of very violent moves to the downside, but you can see it does not last long. Apple falls, but it don't fall. It falls extremely quickly. Almost not enough time for you to react, to take a short in it in a lot of cases, before it just turns around and grinds its way back up again. Still at this point, very, very neutral on Apple. I would not certainly commit one way or the other to this move within Apple, but just to tell you to watch some of these levels. The 20's been danced around. It's not really kind of a factor here. I'd really wait for lower breaks below here and or upper breaks here. Apple is probably best day traded until we break one way or the other, above here or below there. It's probably best to wait and maybe day trade it if you get that opportunity or have the opportunity to do that during the course of a day. Here we are back above that blue line, but we've seen close above, drop, close above, drop. Will the pattern continue? I don't know. We're on just above this line, but what we've seen in the past is just above and drop, just above and drop. Apple's going to do its best to try to get up and above these levels, and if I think it can, if it can clear the 366, 367 range, I do believe we could see a nice strong close again above this blue line. But history has shown us it hasn't made it 2 weeks in a row. FAS and FAZ. Now, these are very interesting. We're seeing the same patterns on these, and they're symmetrical triangles. So, I'm going to tell you, it's pretty clear to me where our breaks are at. You're going to look for something below about 29.50 and something above 32 if you want to jump into this thing. The symmetrical triangle is very, very clear to me. Count this one of a number of ways, but for me, as a technician, I look at that. I look at that side first before I jump into the Elliott wave side. So from a technician standpoint, we're just going to wait for breaks. Like I said, above this 32-ish area and below that 29.50, I think, are my favorite areas here on FAS right now. From a daily perspective, if I can get the charts to pull up here. Oops, that's not what I'm looking for. It's a little mess up in stock charts. Sorry about that. Let me go back and try that again. You can see come on. There we go. All right, so you can see how we're kind of bouncing sideways. What I decided to do was just diagram exactly what I think is really the bigger overall picture, and that is nothing but a straight sideways trading range. Go figure. It's exactly what the markets have been doing. It would stand to reason that the financials would do the exact same thing. It's hard for the markets to go up or down and for the financials not to follow one way or the other. It's not completely uncommon for the markets to go up and financials to go down, but it's not often that that happens. Usually the financials are right with the markets themselves. So in this case, you're looking for those bigger moves. I like the same levels I gave you on the 60 for the daily. That is below that 29.50 and above that, let's get 33 mark, I think, before you want to jump into this thing. But you can see the consolidation here in a very, very neutral mode. FAZ showing the same thing. Here's that big symmetrical triangle. I'll be honest, I really like the look of FAZ a little bit more than I do the FAS mark, and I'm just going to stick to my guns and show you these thin lines here, that same type of trading range. Just in a different way, and I really kind of would tell you to watch closely for moves back above that 50-day moving average. Back above the 50-day, then to this blue line, and above that we could see a little bit of a climb here within FAZ. Otherwise, back below 37.50, yeah, no interest in the long side for me yet again on FAZ. But I like the consolidation here. The bears aren't giving up ground, the bulls aren't either, but more importantly, at least the bears aren't. So we are seeing something where we're kind of sitting on some support here. Let's just see if we can find some legs. Has to come with bearishness in the markets, though. That's why these first few days are very, very important to be watching. I really do believe we'll see a break one way or the other. We'll get out of this consolidation and trading range that we've been watching. So you want to make sure that you have your orders in or your finger on the trigger so that you're ready for these entries. And we'll just, we'll see how the week plays out. But I really do feel that we will move out of this trading range sometime during the course of the week. You want to make sure you're ready for it. All right, guys, we will be back with you again, of course, as always. Oh, tomorrow. And then here's what came off my list from last week. There's only a couple. I've still got a ton of stuff that I left on, and I added a bunch more. I think I've got 6 or 7 on my subscribers list for this week of individual stocks to play. EQR we had on for a couple of weeks. It wasn't a symmetrical triangle here, and we caught the break down and out of it. And then I looked it over last weekend and thought, oh man, this has got a great chance to go up. So then we played it back up. So we played it down for a little bit, we played it up for a little bit, and then we were stopped out as it broke back down through this area, and then it chopped sideways. So now I'm not interested anymore. But EQR gave us some very strong moves to the upside and some decent moves to the downside. We were able to play that over the last couple weeks. It came off the charts. TLT was one. This is one that a lot of people are starting to get hot on, but I was in this thing way back here. We've been in this now for about 3 weeks, where we got in. I think my initial entry was $89.50, then $90, and $90.50. And there were a few others. Above the 50 was another entry that we had coming right back into this overhead support. I gave stops up here. I gave recommendations. People could have taken profits up here if they would have wanted to, or I told them where to put stops in below it. We did get stopped out of this trade. We're done with this trade, and now I'm not really looking at it anymore. So I took it off my list, but TLT was very, very good to us over the past couple weeks. So this one came off the subscribers list as well. As I said, there's a bunch more that I left on. I'll put those on as I take them off every week. I'll put them on here so you guys can see what's going on in the subscribers lists and how we're doing there. But I think I have like 6 or 7 stocks to be looking at over the course of this new week. So if you guys just don't have the time to find the right stocks to play, or would just like a little help with that, for $1 a day, you can have me do it for you. And we go over these trades every single day. We talk about them. Where's the entry? Where's another new entry if you didn't get in the first time? How to play it, where to put your stops, entries, exits, the whole bit. I cover it all in the subscribers newsletter, plus a ton of other information. For $1 a day it's so well worth it. Anyway, we will see you then again tomorrow night. And let's watch for that break. I think this trading range is going to give itself up this week. See you then. Bye.